Assalamualaikum warahmatullahi wabarakatuh and salam sejahtera. I would like to discuss with you on the second topic in our syllabus, that is MFRS138, Intangible Assets. This lecture will be recorded in a few sessions so that you can download the video more easily. Alright. So this is the outline of the topic. First of all, I'm going to touch about the definition of intangible assets, followed by the initial recognition and measurement. Subsequent measurement, intangible assets with finite useful lives, intangible asset with indefinite useful lives, recoverability of the carrying amount. This is actually to test the impairment for the intangible asset. Next, the recognition and disclosure. First of all, the definition of intangible assets. According to MFRS 138, the intangible assets can be defined as identifiable non-monetary assets that has no physical substance but are expected to benefit the company for more than 1 year. Basically there are three important key points that can be identified in this definition. First one, intangible asset must be non-monetary assets. That means assets such as cash or accounts receivable cannot be defined, cannot be categorized as intangible assets. The second key point is the intangible assets must have no physical substance. That means assets such as land, building, machineries, and motor vehicles cannot be categorized as intangible assets because they have physical forms. And then the third key point is that the intangible assets must benefit the company for more than 1 year. So that means the intangible assets fall under the category of non-current assets. Alright, this is the list of examples of intangible assets. As you can see, there's a lot of examples of intangible assets, from scientific and technical knowledge, licenses, until rights under licensing agreements. Actually, there's a few other intangible assets that are not included in this list, such as brand, copyrights, and goodwill. Even though there's a lot of examples of intangible assets, not all of them can be recognized as intangible assets in accordance with MFRS 138. In order for an intangible to be recognized as an intangible asset as per MFRS 138, it must meet three recognition criteria. What are the three criteria? The first one is identifiable, second, control, and third, future economic benefits. Let me discuss about each and every criteria one by one. The first criteria is identifiable. What is the meaning of identifiable? Identifiable means the intangibles must be separable from other assets and be identified as a separate asset to distinguish it from goodwill. So in order to be recognized, the first criteria, the intangible asset must be able to be identified separately from the entity or from other assets. In this case, goodwill does not meet the identifiable criteria because goodwill cannot be identified separately from the entity and from other assets of the entity. In order for a goodwill to be recognized, the whole entity must be disposed of or it must be sold to another entity. Okay, here it is also stated that an intangible asset is identifiable if it is separable, that is capable of being separated or divided from the entity and sold, transferred, licensed, rented or exchanged either individually or together with a related contract, asset or liability, or it arises from contractual or other legal rights. Okay, so the important uh, criteria, okay, or the important uh, yes, the important criteria for an asset, okay, to be identifiable is that it must derive from a contractual agreement or from legal rights. Okay, example of intangible assets, okay, that arise from a contractual agreement or a legal arrangements, okay, include patent, okay, copyrights and franchise. Okay, so as I mentioned just now, okay, goodwill cannot be recognized internally, okay, cannot be recognized as intangible asset because it cannot be disposed or cannot be identified separately from the entity. All right, in order for a goodwill to be identified, the whole entity must be sold to another entity, or it must be the entity must be disposed of. Okay. Alright, that is the first criteria. Okay, now let's move on to the second criteria, which is control. Okay, control usually arises when there are legal rights. Okay, when an intangible asset is acquired through a legal arrangement or contractual agreement, automatically the entity will have a control over the intangible assets. All right. Okay. What is the meaning of control actually? Okay. Control means the power to obtain the future economic benefits flowing from the asset and can also prevent the access of others to those benefits. All right. So the examples of intangible assets that meet the control criteria, okay, include the patents and copyrights. Okay. All right. Okay. For example, okay, if an entity acquired a patent for its invention, the entity can restrict other people from making, using, or selling its invention. Okay, so that's how an entity can control, okay, the use of its intangible, okay, by restricting others from using, from selling, okay, the patented asset. All right. Okay. However, there are some intangible assets that actually fail the control test, that do not meet the control criteria. Okay, the examples of intangibles that do not meet the control criteria include skilled employees, okay, customer list, customer relationship and loyalty, and market share. Okay, these are the examples that fail the control test because an entity cannot control all these intangibles. Okay, for example, even though a company has provided training to its employees, okay, but the company can't control its own employees. They can always walk away from the company anytime, okay, unless the company has signed an agreement with the employees. If no agreement has been signed, then the company has no control over its own employees. Okay, same thing with customer list. The entity also cannot control its own customers. The customers always has the freedom to purchase goods from another from another business. All right, and then same thing with the customer relationship and loyalty. Okay, you cannot control your customer loyalty. Okay, they can always purchase from other businesses. Okay, and we cannot control the customer's preference. Okay, customer's taste. All right, they always have their freedom to purchase from another businesses as well. And then market share is also another intangible that cannot be controlled by an entity. Okay, because you cannot prevent other company from entering the market. Okay, so these are the examples of intangibles that fail the control test. Okay, therefore they cannot be recognized as intangible assets in accordance with MFRS 138. Okay, and the third criteria is the future economic benefits. Okay, what is the meaning of this criteria? Okay, future economic benefits imply that the use of the intangible assets will bring about revenue from sale of products or services, cost savings or renting of the asset, or other benefits resulting from the use of the asset by the enterprise. Okay, for example, a company can sell its patented products, okay, or copyrighted materials, okay, to generate income, okay, for its business, or the company can earn royalties when other people are using their patents or copyrights. Okay, so if the intangible meet this criteria, then it can also be recognized as an intangible asset. All right. Okay. Okay, however, if an intangible asset does not meet all the three criteria that I discussed just now, okay, it should be written off, okay, as expenses in the SOPO. All right. Okay, and MFRS 138 also does not allow an intangible asset that was written off as expenses in the SOPO to be capitalized later. So that means if the cost incurred for the intangible asset has been written off, okay, previously in the SOPO, it cannot be capitalized or cannot be recorded as an asset in the SOPI, okay, later on. All right. Okay, so in order to be recognized as intangible asset, you have to remember, okay, the intangibles must meet all the three criteria. If any of the three criteria, okay, is not met, then the intangible asset should not be recognized as intangible asset, but it must be written off in the SOPO. Okay, that's all about my first session of lecture. Okay, I will post another session of my lecture later. All right, thank you for listening. Assalamualaikum.